Hello, my name is Leo Geisler,
And I'm Edward Funkhouser.
and we are both juniors from Madison Country Day School. We recommend Mondelez International as a buy for the Young Investor Society Global Youth Investment Competition.
Mondelez International was created in 2012 after Kraft Foods split their grocery and snack foods divisions. Since then, they have been a global snacking and confectionery leader operating in 150 plus countries with 91,000 employees. They have 4 core snack segments: biscuits, chocolate, cakes and pastries, and snack bars, having a top 3 position in each of them. Mondelez balances their large revenue base between developed and emerging markets, with 61% of their revenue coming from developed markets and 39% coming from emerging markets.
Our investment thesis relies on 3 key points. First, Mondelez has a strong dominant market share, which is supported by their iconic brands across their 4 industries, especially in the biscuits market, where they have shown the highest growth in most dominant market. Second, Mondelez is accelerating its growth through disciplined mergers and acquisitions, especially for brands in emerging markets. Some examples of this are Ricolino, Chipita, and Everth to grow their international reach. Lastly, our valuation. The share price today does not discount the conservative revenue and EBIT growth, which we think is an opportunity for investors. Also, our discounted cash flow assumed a price of $72, which is a 20% increase from today over the next 12 months. As Eddie said, the 4 industries that Mondelez operates in are biscuits, chocolate, cakes, and snack bars. For the biscuits industry, they hold 17% market share globally, while the second largest competitor is Campbell's with 4%, proving their dominance. They also have 7.6% compounded annual growth rate over the last 5 years, with projected 5% CAGR through 2028. For the chocolate industry, they're the second global position in market share with 12%, while Mars is in first with 13.5%. That being said, Mondelez has the highest compounded annual growth rate over the last 5 years out of the top 3 players at 8.1%. For the cakes industry, Mondelez ranks 3rd globally with 3.8% market share. Mondelez has gone through many mergers and acquisitions in the cake industry so that they can increase their reach internationally. Lastly, snack bars. The rise of GLP-1 medications have been increasing a movement for more health-driven snacks. Mondelez has adapted to this by acquiring brands such as Cliff, Lou, and Perfect Bars to reshape their business brand into being more health-driven.
Mondelez is positioned competitively with a moderate economic moat that is based on 3 key factors. Firstly, their brand recognition and global scale. Mondelez leverages their globally recognizable portfolio of brands to differentiate itself in a competitive market. It also uses its network of distributors worldwide to acquire and easily integrate their companies that they buy into these new high-growth markets. Secondly, as Leo mentioned, Mondelez has a dominant and clear number 1 position in biscuits that is backed by steady organic growth and strategic acquisitions. This resilient strategy has allowed them to defend their number 1 position despite having a lower 5-year compound annual growth rate compared to their rivals. Lastly, their moat is constrained based on industry-wide factors, such as low switching costs for consumers and growing private label competition from retailers. We analyze Mondelez based on the strengths, weaknesses, opportunities, and threats SWOT analysis. Firstly, Mondelez's strengths. They have a robust portfolio of brands that provide consumer loyalty and a resilient M&A strategy that has allowed them to strategically divest non-core assets and direct the proceeds towards new high-growth brands in emerging markets. For opportunities, Mondelez is on pace to overtake number 1 Mars in the chocolate sector based on their last 5-year compound annual growth rate. Additionally, Mondelez can direct capital proceeds from their recent developed markets gum sale, which netted them $1.1 billion, towards new high-growth brands in emerging markets. Next, weaknesses. Mondelez is increasingly reliant on volatile commodity prices that can rapidly increase their expenses and squeeze their profit margins. Additionally, there's low consumer switching costs in the confectionery industry. Mondelez's threats are that recently there's been a shift in developed markets towards healthier alternatives, which puts pressure on Mondelez's brands that focus on high sugar. Additionally, the rise of GLP-1 medications reduces consumer snacking frequency and appetite.
We also used a Porter's 5 Forces framework analysis on Mondelez. First, their competitive rivalry we rated as very high with a 5 out of 5. This is because Mondelez competes on a global scale at a very high level, which makes it very hard for them to be at the top of any of their industries. For bargaining power of consumers, we rated as moderate with a 3 out of 5 rating because grocery stores have a lot of bargaining power because they can decide which products to put on the shelves. However, the consumers have very little bargaining power. For the threat of substitutes, we rated as very high with a 5 out of 5 because consumers can easily buy a non-chocolate sweet if cocoa prices raise too high. Bargaining power of suppliers, we rated as high with a 4 out of 5 because the stock value can heavily depend on the prices of sugar and cocoa, which can change drastically day to day and squeeze their profit margins. Lastly, the threat of new entrants we rated as low because, as I said earlier, this industry is very competitive, which makes it much harder for a new business to come and take market share from a company like Mondelez. The environmental and social and governance considerations for Mondelez are very important as they have a large manufacturing footprint. That being said, they have goals of net zero carbon emissions by 2050. Also, their packaging is 96% recyclable, with goals of being 98% recyclable by the end of 2025. Also, the Cocoa Life program, which promotes reforestation and environmental regeneration for their farms in East Africa. On the social aspect, the Cocoa Life program trains workers, improves farmers' lifestyles, and reduces child labor on their farms. Mondelez has a goal of 100% of their farmers being a part of this Cocoa Life program by the end of 2025. Also, Mondelez has the Snack Mindfully program, which promotes healthy snacking habits for the consumers. Lastly, governance. Their CEO and chairman, Dirk van de Put, has been CEO since 2017 and chairman since 2018, respectively. He manages the ESG considerations through a yearly governance, membership, and sustainability committee, also known as the GMSC. This oversees all of the environmental and societal social conditions every year. The opportunity for artificial intelligence for Mondelez is that they could use this for their social media advertisements. In fact, Mondelez has already invested $40 million into IDA, an artificial intelligence platform, to generate thousands of their social media posts internationally. This is expected to reduce their marketing costs by 40 to 50% by using this method. However, the risk to using this method is that inaccurate information may be spread using this new technique. However, this will be combated by making sure that no AI content will be posted without human validation.
We see three key risks to investing in Mondelez. Firstly is their high exposure to commodity costs. Between 2023 and 2025, cocoa prices spiked, which forced Mondelez to increase their prices and hurt the profit on the chocolate sector, which makes up a third of their revenue. Secondly, Mondelez's growth recently in the last 12 months has been driven by pricing increases due to commodity prices increasing, which led to a majority of their organic revenue growth coming from pricing and actually a negative volume growth. Mondelez would need to address this to alleviate these concerns. And third, private label competition is growing from retailers who are increasingly incentivized to promote their own brands, which have higher margins and lower costs for consumers, which risks the gradual erosion of Mondelez's brand's market shares.
For our discounted cash flow analysis, the current stock price of Mondelez is at 60, where our analysis gave us a projected $72 price point. This provides us with an upside of 20% over the next 12 months. Our assumptions for this analysis were that revenues would increase 3.5% year over year, with EBIT growth growing at 6%. We also use an 8% discount rate for this analysis based on the weighted average cost of capital. And overall, we based this discounted cash flow on historical data, professional outlook, and their overall growing business model, which we have outlined thus far.
We rate Mondelez as a buy because of their robust portfolio of world-famous brands, DCF-backed strong financial valuation, and declining cocoa prices, which will lower their input costs and improve their margins. Additionally, Mondelez's current price does not discount the 3% revenue growth and 6% EBIT growth. Combined with the financial valuations we have covered so far is why we rate Mondelez as a buy. Thank you.